Hello, welcome again to FAIRtax Power Radio. I'm Bob Paxton.
I'm Bob Scarborough.
And we are the FAIRtax guys. And yes, I am sitting in front of two steam trains. If you're listening on the radio station or an audio only podcast, you need to call up the video and see this. Now, actually, I'm not sitting on the railroad tracks. That is a virtual background of the steam locomotives that I've actually ridden behind both of them. That's pretty cool.
That is cool. Bob he takes cruises to places and then gets on a train and rides around a little bit and then gets back on the boat and heads back home. It's really quite
Well,
the
yeah,
plane.
we'll be doing that later this year. We're going to be taking a cruise out from San Diego out to Hawaii and back. And then when we get back to San Diego, we're going to get on the Amtrak. And it's going to take 4 days to get across country from San Diego back to Florida, where we live here. But that's going to be fun. We'll deal with that when the time comes. We'll have to get way ahead on our recording back then. So because I'm going to be gone for 2 weeks and then some, close to three. And but we'll get there. All right, let's get going here on FAIRtax Power Radio again, as we always do. Thank you for tuning in, and urge you, please, if you would, to kindly share this video to your social media accounts so as many people as possible can see this thing. And let's just dig right in here. Last week we got our first two entries into the Tax Proposal Hall of Shame for 2025. I don't have any HOS worthy stuff this time around, but we have still got plenty. The Congress critters have been busy messing with the tax code, which probably means that the lobbyists have been handing out lots and lots of money here over the past couple of weeks. But starting off our Congress.gov segment this week on FAIRtax Power Radio is H.R. 1650 from Representative Jody Arrington of Texas. This is to amend the Internal Revenue Code to permanently extend the exemption for telehealth services from certain high deductible health plan rules. And again, the word that jumps out to me on this one is permanently. We talk about how the tax code is so fluid. It's always changing. The fact that we get all of these changes that we look at on Congress.gov every week is proof enough that the Congress critters are always messing with things. But then a lot of the times you get that, well, we want to make this change permanent. Well, why didn't you make it permanent when you first put it in there? Well, because we can't do that. We have to come back and do that later. This is such a mess. We have got to get rid of this entire system and replace it with the fair tax so we don't have these temporary things that become permanent. And then these permanent things, later somebody decides they want to take it away. It is just, nothing but shifting sand is holding up this current income tax system, and we've got to replace it before it just collapses under its own weight.
One of the things that's interesting about the fair tax is it's a great equalizer. You have 155 million taxpayers that contribute to the income tax, with all of the challenges that come in preparing and that type of thing. Now you've got the fair tax that comes in and brings in 300 plus million taxpayers, if you will, that are paying through retail sales. You've got international travelers, you got people that are into cash underground, that drug dealers and the prostitutes, et cetera, that we always talk about. Can you imagine, and we talked about this last week, that the federal government is going to possibly end up with more money in the coffer under the fair tax than the current system. But now, tell us a little bit about fair tax.
Okay. Well, let me note also that bill to amend the Internal Revenue Code to permanently extend the exemption for telehealth services has a companion bill in the Senate. That's the S-763. But let's just go on here. Go back to the Senate here. This is S-788 from Senator Merkley of Oregon, to bill to amend the Internal Revenue Code to impose an excise tax on the failure of certain hedge fund owning excess family residences to dispose of. I think we looked at that last week, and that must be a companion bill to something that's already there. Okay, here we go. 796 is the one I really meant to look at. This is from Senator Barrasso of Wyoming to amend the Internal Revenue Code to repeal the corporate alternative minimum tax. Alternative minimum tax. That is a crafty little provision that was put into the tax code, which basically says if you're able to find enough exemptions and loopholes and deductions to reduce your tax income, we're going to make you pay an alternative minimum tax anyway. I think that's based on your income level. If your income is above a certain amount, that the alternative minimum tax kicks in if you're able to find enough exemptions to the regular way. But apparently that works for corporations as well. And Senator Barrasso now wants to repeal the corporate alternative minimum tax. Well, why don't you just repeal the corporate alternative minimum tax, the individual alternative minimum tax, the corporate income tax entirely, and the individual income tax entirely? Junk the whole system, Senator, and support H.R. 25, even though that's, you're in the Senate. You need to put a companion bill to H.R. 25 in the Senate. And Senator Barrasso, I would call upon you to do just that. If you really want to start repealing parts of it, just get rid of the whole thing.
Right. Exactly. And the challenges that are there in the Senate is that there is no sponsor.
Yeah, we were going to work on Senator Scott. I think Senator Blackburn from Tennessee would be another good one to put the fair tax bill in the Senate. So hopefully we can make that happen. Let's continue here. Another Senate bill, S772. This is from Senator Mark Warner of Virginia. Excuse me, I got a frog in my throat here. To bill to amend the Internal Revenue Code to make the exclusion for certain employer payments of student loans under educational assistance programs permanent. So again, we got another temporary part of the tax code. Apparently, employer payments for student loans under educational assistance programs currently has an exclusion that's going to expire, and Senator Warner makes to make it permanent. Let's just get rid of the entire mess and replace it with a fair tax, folks.
Without a doubt, the simplest, fairest, easiest way, and very transparent, I might add.
Mm-hmm.
Think about challenges in compliance that go away. Think about the folks that are trying to game the system, not only on the legislative side of things, where they can use the tax code currently in place, but also for folks that are going to be trying to avoid the taxes, and those that are going to end up evading paying taxes. They run out of opportunities when the tax is on consumption as opposed to income.
Mm-hmm. All right, let's move on here. HR 1611. This is just, you can tell this is one of my hot buttons, all these different tax credits. This is to amend the Internal Revenue Code to provide a refundable tax credit for certain teachers as a supplement to state efforts to provide teachers with a livable wage and for other purposes. Oh, we're going to help the teachers, but we're not going to help the firefighters. We're going to help the teachers, but we're not going to help first responding police officers. And again, not that teachers are unworthy of help, but they are not the only ones who are worthy of help. So why don't we just treat everybody, again, regardless of how you make your money, whether you drive a bus, whether you're a police officer, whether you fly a commercial airplane, or whether you drive an Amtrak train, regardless of how you make your money, let's treat everybody the same. Nobody gets a tax credit. Nobody gets a loophole that nobody else gets. You just have none of that across the board. Treat everybody equally as the fair tax does.
Yeah, and I think I heard you say tax credit, refundable tax credit for certain teachers.
Yeah, the ones that contribute to this particular political cause, I guess. I don't know. Again, there's no text in this. We don't have the exact text of exactly who qualifies as a certain teacher to get this refundable tax credit. And refundable, okay, that's a four-letter word there when it comes to the tax code. That means even if your tax credit exceeds your tax liability, you get the difference back. That in effect is we're just going to hand you this chunk of money.
Right.
And they call it a refundable tax credit, which means that if your tax credit exceeds your liability, you get the difference back. which is just insane. One more here, HR 1583. This one makes me laugh. This is Representative Claudia Tenney of New York. A bill to amend the Internal Revenue Code to remove private or commercial golf courses and country clubs from the list of uses for which certain proceeds cannot be used. Apparently, there are certain proceeds that under current law cannot go to private or commercial golf courses and country clubs. And Representative Teddy wants to remove that little provision so that if private commercial golf courses and country clubs had received, is that in the tax code? I tell you, you want to put that one in the Hall of Shame? I think we might.
Tag that one.
All right, we'll go ahead and do that. But again, that is just crazy that the tax code is dealing with that kind of stuff. Let's just get rid of it. Let's make the tax code's single purpose for which it should be in the first place. That is simply to raise the revenue that the government needs. Quit picking winners and losers. Quit giving breaks to some people and not others. Again, you can look at the political agenda pushing that goes on within the tax code. Both sides do it. It's wrong on either case. Jerk it all by the roots and replace it with the fair tax. Wow. Okay, that's I'll get down off the soapbox for right now. But that's so going through some of this stuff. Some of it just makes you laugh, and some of it makes your blood boil. You know, why in the world do we, the American people, continue to tolerate a system under which this happens all the time? It's just nuts.
Well, and you think about that part of it. And the fact of the matter is we've got the federal government, acting as proctologist, and we have that's going on in our lives relative to our income, and who needs that? Who wants that? I said this last week. We're apolitical. The Americans for Fair Taxation, promoters of HR 25, the fair tax, are apolitical. We don't take sides regarding politics. We are searching for something that's fair and efficient and transparent. The national climate right now is let's not let any stone go unturned with regards to federal spending. I think that's great. Politically speaking, people are kind of rippling through, and one side or the other, meaning left or right or conservative, are setting up to battle something that is needed, much needed. We're 36 plus trillion dollars in debt, and there's no end in sight. And it's not so much a taxing issue, even with income tax. It's a spending issue, and has always been a problem. And we're just now finding out how bad it is up there.
It is. Okay, well, let's move on here on the program. We talked to Randy Fisher a couple of weeks here on Fairtax Power Radio about social media, something that you and he do a lot more than I do. So I do not consider myself a social media expert by any stretch of the imagination, but I do look at Facebook fairly regularly. And there was I thought, a really thoughtful question that someone posted to a Facebook discussion about the fair tax that I'd like to latch on to and dig into with a little bit more, more intensity here. And that is, he was questioning the idea of the fair tax applying to services. I can see where that question comes from, because I know that, at least I know in Florida, that the state sales tax here in Florida does not apply to services. Your barber, your doctor, your accountant, your lawyer does not have to charge you the state sales tax when you engage their service. It's been a long time since I've lived in North Carolina, but I think it's the same way still up there, is it not?
Yeah, we get charged on buying something. Groceries tiered. And municipalities get sometimes get their hand in for a percent or two. So it's tiered, but services are not taxed.
Yeah, I remember several years ago here in Florida, there was a proposal to extend the state income tax to services. And it was so long ago, I really don't remember the particulars of the discussion that ensued relative to that proposal. But I do know that the public sentiment was overwhelmingly against taxing services with the state sales tax. So that idea went away and hasn't been back since. So again, it's understandable why people look at the fair tax and say, wait a minute, you guys are going to start taxing services? That's territory we haven't been in before. But a couple of things. There's several different facets to that question, and I'd like to dig into one of them a little bit. And the first of it is actually based in the fact, again, that the fair tax replaces the federal income tax. And when you hear the fair tax replaces the federal income tax, people think about, well, no more withholding, no more tax returns, stuff like that. What they don't think about is no more tax costs that are imposed along the entire length of the production chain. No more tax costs will be embedded into the prices of things we buy. And we've mentioned that before. How much of the price of everything you buy is the tax costs along the way that are being passed on to you? And when you're talking about taxing services, there are tax costs in the price of services today, the same way that there are tax costs in the price of products. For example, the money that you pay your doctor for a doctor visit is taxable income to that doctor. So a part of what you pay for your annual wellness checkup ends up at the IRS as the doctor's income tax. So yeah, there are tax costs in the providing services as well that are embedded in those prices. And so by taxing services, the fair tax is doing the same thing that it's doing for products, simply replacing all of those embedded costs with a visible, efficient thing like you have on your scrolling banner. It is visible when you get your receipt. Your receipt will show you how much fair tax you paid. So if you go to the doctor's office and you are charged the fair tax on that service, the receipt you sent will show you how much of what you paid was fair tax. You do not see under the current system how much of what you pay for an annual wellness visit ends up at the IRS as the doctor's income tax. So yeah, it's really not that big a deal replacing services, replacing the tax cost in the price of services with the fair tax, the same way it's doing for sort of products that you can buy and hold in your hand.
That's right. Like if you're a business owner or a farmer, you buy something strictly for business personal consumption, you pay no consumption tax. If we go down there and buy a box of paper or a bunch of ink pens and that kind of thing, and we only have them here in the business, then there's no tax, no consumption tax.
Okay. Well, he asked a follow-up question as well, which I'm going to pose to you and let you answer it. And that is, what impact, since we're not taxing services now, applying the fair tax to services, what impact is that going to have on the low income, the poor folks?
The fair tax has the prebate involved in the transaction. It's a monthly check that goes out to all residents, legal residents of states, determined by an annual accounting of where the level of poverty is in the U.S., whatever that number is. And then whether you're an individual, you have two people in your family, maybe you have a few kids, there's a system that calculates out what amount you are going to get on a monthly basis. So essentially you're untaxed. Everyone is untaxed up to the poverty level. So regardless of whether we're taxing services or products, and we're only talking about new, not used home, used car, used appliances, there's no fair tax there. But for everyone, you're untaxed up to the poverty level, meaning you're going to get a check that's equal to the amount based on the size of your family, based on the poverty level. And you're going to end up being able to take that check and buy whatever you want to that you would consider to be essential and show up at the grocery store or, even the beer and wine store if you consider that essential. And it could be whatever that amount is. You don't start paying any of the fair tax until after you've spent up to that amount every month.
So so the answer to the guy's question is really that the taxing services is not going to have any effect at all on the low income people until their spending rises above the poverty level. So if your spending up to the poverty level is a combination of goods and services, there's going to be no tax on any of that, or actually you'll pay it at the cash register, but it will be reimbursed to you in the prebate. You will not take a dime out of your own pocket to pay the tax on products or services until your spending rises above the poverty level. So the impact of taxing services on the poor is going to be pretty negligible if you define the poor as people who spend right at or even maybe a bit under the poverty level, because they're not going to pay any fair tax on anything they buy, anything. And it doesn't matter what it is. That's how that goes.
Plus, you get the theoretical raise because the federal taxes are not being taken out of your check anymore. You get the state taxes taken out, but the federal taxes won't be deducted from you. It all moves over to the consumption tax. So there's an instant raise in cash in your cash flow from your check that you are now able to use, plus the prebate, and that actually collects a paycheck on a weekly, bi-weekly, semi-monthly basis. Now, the talk about the prebate brings up another question. Why have a prebate? Why not just exempt essentials like food and medicine, Bob?
Yeah, well, that is the way that a lot of the state sales taxes go. All right, we're not going to tax food in Florida. There's no tax on most of your grocery items, and so let's not bother with this prebate. That's just going to be a level of complication we don't have to deal with. Let's just exempt certain essentials like food and medicine. And the answer, the reason that you don't want to do that is that ain't simple. It's not going to stay simple. If you start deciding what item gets an exemption and what item doesn't, you are again inviting government bureaucrats to come in and define for you what is essential and what isn't. But as you mentioned earlier, there may be some people who think a trip to the beer and wine store is indeed essential for their existence. Other people will look down on that and say, "No, that ain't. You can do without that." But again, the fair tax lets you decide for yourself what your essentials are. If you start making exemptions and saying we're not going to tax this because this item is essential and this item isn't, you are opening the way not only for federal bureaucrats to step in and start setting those definitions for you. Guess what's behind a lot of that stuff? Lobbyists will come back in and they will be spending millions upon millions of dollars again to try to buy favorable tax treatment like they do under the current income tax system. I mean, we've looked at the astounding level of money that lobbyists spend trying to influence the tax code. And if you start opening up the fair tax to that kind of meddling and manipulation, then you're going to have something that is much more unfair, that is much more complicated than any kind of mechanism that it would take to administer the prebate. We don't want to make those exemptions because I don't want the government telling me what is essential and what's not. Let me spend my money, let my spending decisions decide for myself what is essential and what's not. I'm going to buy groceries. I'm going to buy cheerwine. I'm going to buy an Eastern North Carolina barbecue, and I'm going to buy gas for my car and stuff like that. But let me decide what my essentials are, not some government bureaucrat or some, lobbyist influenced Congress critter trying to tell me what is essential and what's not. Just refund the tax on your spending up to the poverty level. I decide what my essentials are. And that is far and away the best argument for we don't want to get into the business of trying to carve out exemptions and stuff like that under the fair tax. Let's just tax everything at the cash register and give everybody back the tax they paid on their spending up to the poverty level. End of story. Infinitely more simple.
Done. The prebate.
Did I do good on that?
Yeah, I enjoyed that one. That was good. So the prebate comes in and you're untaxed up to the poverty level and you're done. And then you go out and buy your stuff and no look at your income. You don't have all that challenge. If you're a business owner, as we say every time, all that time that you have normally given, invested in compliance for income tax pay, you now can spend on innovation, or you can take a nap, or you can do anything with that time that increases the potential for your business to offer more opportunities for hiring, innovation and new services or new product that you could come up with. So you don't have that weight on top of you that's always pressing down and causing stress. You can now relax. That's another word that needs to be on the banner. Efficient, visible, relaxing.
That'll work.
Yeah.
Okay, we got a couple of minutes left. I want to toss one more question at you. And of course, anytime you hear somebody making an argument against the fair tax and they use it's going to be a 30% tax on everything you buy, you know that they're really not being honest. But we hear this, wouldn't a 30% tax on everything you buy spawn a huge black market with the fair tax? And the answer to that is?
I have two people involved in that. Somebody at the store and yourself, and there's probably no chance that most people I know would not go out there and attempt to do that. Some sort of collaboration, if you will. You go to the store, you buy a thing, you buy the phone, or you buy, whatever it is that you're going to get. It might be a consumable. You're going to present it at the cash register. You're going to get the receipt, and the receipt is going to show the fair tax on it. And it's like going and buying a tank full of gas. The tax is included in the final price. So you are now transparent. The tax is now transparent. You can see how much is going in there. And right now, we have no idea what the tax is totally, because of all the embedded taxes that we're having to deal with when we purchase something now.
Yeah, well, that kind of question, a 30% tax on everything you buy, implies that your cost of living when the fair tax is implemented is going to skyrocket by 30%. That is just not true. We've talked time and time again here about how the fair tax replaces those embedded tax costs, that the fair tax is not going to spawn a huge black market because it is not going to spike prices by 30%, for crying out loud. So I'm afraid we're going to have to leave that there because we are slap out of time again for this edition of Fair Tax Power Radio. I will make one little quick promotional on that. We are going to have a mystery guest back with us next week on Fair Tax Power Radio. I'm not going to tell you any more about it, but we will have a mystery guest that I think most folks here will be glad to see next week here on Fair Tax Power Radio. So tune in, same time, same station for Fair Tax Power Radio. We certainly appreciate it. Until we meet again, I'm Bob Paxton.
Bob Scarborough.
We are the Fair Tax guys, reminding you the fair tax is the only truly fair tax, and once you understand it,
you'll demand it.
So what do you need from me to get these taxes collected?
Glad you asked, because there is a fair amount of information you need to be aware of.
That's your tax plan?
Oh, no, this is just the revisions for this year's tax plan. What I need from you is you need to keep track of all of your income, as well as any taxes that you've already paid. Also, any gifts that you received or gifts you've given to churches or charities or individuals throughout the entire year. Do you do any side jobs?
Every now and again.
Great, because there's some more information about that right here. Everything you need to know right here. So just simply compile that, send it in to us. Be careful, make sure there's no mistakes. If we do find mistakes were made, we can fine you or, throw you in jail. So you might want to be aware of that.
And what do you need from me?
As an individual, nothing. As a business owner, or if you're doing side jobs, yes, you would have to collect taxes on that, but it's all right here.
Can I get a copy of that?